Here are 10 essential terms that you need to know when dealing with commercial real estate leasing. First, the lease types. You can have a gross lease, which includes all of the property expenses like taxes, insurance, and common area maintenance. That's all included in the rent. So the quoted rent is all that the tenant pays, and the landlord pays all of the other expenses. This normally does not include utilities though. Utilities are outside of the rent payment. Then you can have a net lease. A lot of times these are triple net. And what that means is net of taxes, net of insurance, and net of common area maintenance. You can have variations of this where it could be single net, maybe insurance is provided or not provided, or maybe two of them where taxes and insurance are not provided or paid for by the landlord, but the common area maintenance is. But typically, if you hear a net lease, it's a triple net. So what that means is you have base rent, and that's what the tenant rent charges is. But then they're charged back for their prorated amount of taxes, insurance, and common area maintenance. And we'll cover that common area maintenance in a little bit. But so you have the base rent, and then you have your pro rata of the net expenses. And so if you're one of 10 tenants and the building and each space is the same size, so then you're in 10% of the building, the landlord's going to bill you back for 10% of the taxes, the insurance, and the common area maintenance. That's something to be familiar with. You see this a lot in retail, and you're starting to see it a lot more in warehouse. You don't see a lot of it in office. You may in some higher end situations, but you are starting to see this lease type a lot more. And then you have a full service lease, which is basically everything is included. And most of the time, utilities are part of that as well. Again, you see this a lot in office space. So maybe even your janitorial, your utilities, everything is included in your rent. So that's all what's called a full service. So your three types are gross lease, triple net lease, and full service lease are the main types. You do see some variations, but they're based off of these three types. All right, next, property classifications. So sometimes you'll see Class A, Class B, Class C properties. You don't hear much about D or F because most people would never rent something that was that low of a grade or that much disrepair. So Class A is going to normally be your newest, your nicest, the most amenities, the highest end finishes. Again, this will be from office, warehouse is graded like that. Retail is graded like that a little bit, mostly office, and then warehouse is graded like this. Your Class B is probably going to be just a little bit older and maybe not as fancy, but still in good functional condition. It's going to be a little bit more cost effective versus the Class A, but it may not be the newest and latest and greatest and right in the middle of where everybody wants to be. And then Class C is definitely going to be an older product. It's going to have some wear on it, but it's going to be a lot more cost effective. And so if you just need a place just to check the box or just to get by, you just need an office because you need to get out of your house, or if you just need a warehouse just to store some stuff, but you don't really have any customers coming there, and the cost is really important to you, Class C may be an option. For us, we buy a lot of Class C and then we fix it up and fix all that deferred maintenance to operate as a Class B. So we deal in those types for sure. All right, common area maintenance, also known as CAM. Again, as we were talking about in the lease type, you're going to see this in a triple net lease. And say you have a multi-tenant building. Let's talk retail. So you're thinking of that strip center, that shopping center. So your common area is going to be your areas that every tenant uses, just like it says. So the parking lot, the sidewalk, maybe the signage, maybe the pylon sign, parking lot lighting, landscaping, maybe even pest control. So all of these maintenance items, including utilities and services that service all of the tenants, are put into CAM or common area maintenance. And then each tenant is normally billed back their portion of the common area maintenance. So if you're in 10% of the building, you pay 10% of those charges. If you're in 90% of the building and there's just somebody else in the other 10, you're paying 90% of those charges, but that will all be broken down and spelled out in the lease. And those charges should also be spelled out in the lease. What is covered in culinary maintenance and what is not covered in culinary maintenance. A lot of times a roof may be, it may not be. Parking lot maintenance may be, but replacing the parking lot may not be. You'll want to get into those details so you understand what is included and what is not included. And you take the annual cost of those, your pro rata portion, and then you normally break it up into 12 monthly payments based on those estimations. And then there's accounting for it completed at the end of the year. And then if the estimate was a little bit off, the lease should stipulate how those differences are handled. If it's under a certain amount, maybe you have to make an extra payment. Maybe you don't. Maybe you have to change next year's estimations based on it. But you need to familiarize yourself with that in the lease of how that's all handled if you're in a triple net lease. All right. How is rent calculated? You'll see rents quoted PSF. It stands for per square foot. And typically the lease rents are quoted in per square foot per year. So you may see a $12 rate or a $20 rate or a $40 rate, and that's going to be multiplied by the number of square feet, and then you divide by 12 to get the monthly rent. So it would be an annual rent that you would then divide by 12 equal payments. When you're calculating those, something that's important to understand is our next one, which is the difference in gross leasable area and rentable square feet. Gross leasable area refers to the total floor area available for renting. If you just measured your little suite, what is that actual square footage? But rent is calculated on rentable square feet. Let's think of an office complex that has interior hallways and shared bathrooms. And so it's these common areas, but it's not inside your personal private suite, but you have to use them and you need them to be able to operate. So there's a way that the square footage is calculated. And so it's like CAM, you take the total amount of these common areas and then you divide them equally based on the space. So if it's a 10,000 square foot building and you're in 1,000 square feet, you're paying for 10% increase on your leasable area to get your rentable square feet for your use of those common bathrooms, those common hallways. So there should be a report done when the building was measured, and you should know these numbers up front before you sign a lease so that you know how many square feet you're getting and how many square feet you're paying for, because those numbers may not be the same. All right. Next, tenant improvements, also known as TI, and sometimes it's also referred to as build out. When you rent a space, maybe it needs a lot of work. So you may negotiate tenant improvements, and then you'll have to negotiate who does what work and who pays for it. So say you rent an office and it looks like it's 1972 in there. Somebody's going to have to update the flooring and the paint and the lighting, and there may be other modifications that have to be done. And so a lot of landlords will negotiate TI or tenant improvements. And so you will decide who's going to pay for it, how much it's going to cost, and what the allowance is going to be. And then a lot of times that's how much a landlord's willing to pay for is going to be based on how long the lease is. Sometimes maybe they'll split it with the tenant. Maybe they will increase the rent to account for some of that. It's all part of a negotiation, but it's something to think about of who's paying for what and who's even doing the work. Sometimes the landlord would just prefer to do all of the work, which is something we provide. Or sometimes the landlord might not want to fool with any of the work and just say, listen, I'll give you X number of dollars per square foot for tenant improvement. And you go do all of the work and then you get reimbursed for it. Or maybe you get a lump sum check for it at lease signing. There's many different ways to handle this, but it's something to look into. One option we offer is move-in ready suites. So we don't get into this as much, but other times a space has to be completely modified. Maybe you're going to build a new restaurant and there wasn't one. So there'll be a negotiation around that, but it's something you need to consider for sure before you sign a lease on a space that needs a lot of work done. All right. Next, we have zoning laws and regulations. basically you need to check and make sure that your use is allowed in that area. Especially, I mean, if you're an accounting firm and it's an office complex, it's probably no issue. But if there's times where maybe what you're doing, you can't do it in a shopping center zone retail, or maybe you're trying to do some kind of retail in an office complex, but the office zoning doesn't allow that. And then obviously a lot of warehouse and industrial uses, you got to make sure your use is allowed in those areas. Also, from a business licensing standpoint, it's just always a good idea before you sign a lease that you check with the government, municipality, or the county or the state, whoever is controlling that area, and make sure that your use is allowed. You'd hate to sign a lease and then all of a sudden you find out you can't even do your business you wanted to do there. So that's something we always encourage people to check before they sign a lease. All right, next, subleasing and assigning leases. So what this is you sign a lease, maybe you sign a 5-year lease, and one of a couple of things can happen. First one being maybe you outgrew it and you need to move into a bigger space, but you've got a 5-year obligation. Maybe you're just going to find somebody to take over your lease. That's called subleasing. So you need to find out if your lease allows that, or if your landlord allows that, and how that process works. Most of the time, this is going to be covered in your lease, and so you need to understand that. Another big reason we see, I guess it's more of an assignment than a sublease, is say you sell your business to a new owner. You want to assign that to the new owner. You don't want to continue to be liable for it because you don't have anything left to do with the business. So you've got to find out what options you have to be able to assign your lease. Most of the time, landlords will work with this, but they may have conditions. So definitely check for this section in the lease. Be familiar with it so you know it happens. There may also be a cost associated with doing this because depending on the size and the scope, there may have to be attorneys involved. Just familiarize yourself with that section. All right. Letter of intent, or an LOI. So in residential apartment, if you're renting an apartment or a house, you go look at it, the rent's the rent, the lease is the lease, you apply and then you sign it. Or if you're buying a house, you make an offer with the actual contract. In commercial, the contracts and the leases can be very custom and can be very complex. So most people operate off of what's called a letter of intent, or also known as a LOI. And this just basically sets out all the business terms of the agreement. What's the address? When's the start date of the lease? How long's the lease? How much is the rent? Who's paying for what kind of lease structure? All of the business terms that you would deal with. Maybe your company has some special requirements. You're probably going to cover your tenant improvements in this. So all of the deal terms are on this sheet so that everybody can agree to the business terms up front before there's a lot of time and effort spent negotiating either a purchase agreement or a lease. So you'll hear, just give me an LOI on that. And that's what that means, is basically bring me an offer. And that's used whether you're leasing or selling. All right, finally, default and remedies. This is going to be a section in your lease. If either party, the landlord or the tenant, doesn't do what they're supposed to do, what is that? What are those rules? And then how can they fix it if they don't follow the rules? And then if they don't fix it, what happens? If you don't pay your rent by the 5th, what happens? All right, you get a late fee probably. All right, if you don't pay by the 10th, what happens? You could be put into default. How do you cure that? Okay, you pay the money, and then everything's back to normal or something like that. Or maybe you're being too loud and disturbing the neighbor. What happens? Okay, as long as you fix it and you only do it once, what happens? So it's all of these things that could happen. How do you fix them? And then what happens if you don't fix them? And then, like, it goes for the landlord too. Say the landlord doesn't fix the roof and it leaks and keeps leaking. What is the remedy for that? Can the tenant fix it and charge the owner back, or can the tenant move out or whatnot? Commercial doesn't have, in Alabama, we don't have landlord tenant rights for commercial. Everything is just spelled out in the contract or in the lease. So there's not just a standard set of rules like there is on residential. So you're going to want to familiarize yourself with these so you know if you mess up, or if your landlord messes up, what happens next, and then how does that keep going? So I know this was a lot. But these are the big initials and acronyms, whatever, that you hear a lot, these terms you hear in commercial real estate that you may not understand. So wanted to go over those. And if we can help you here at Right Space Commercial understand any of this, please give us a call and let us know. Thank you.